So what can we expect when we go live within the short time frame?
Okay. So, bit inconvenient way. So, hello. So, okay, what do we have? So, basically, the current platform is built on 3 domains. So, starting with the exciting one is actually brokerage getting in an easy way into the crypto stuff from your fiat deposits. The second thing is then the secondary market, so our exchange module, so you can trade in the crypto field. And well, we are based in Switzerland and not in Tahiti, so obviously we need to fulfill a lot of KYC, AML compliance regulating stuff. So even that is considered as a function domain because it's so well, effort driving and necessary. So maybe just a quick one for brokerage. So I think the special thing, what you will see when we go live is a very convenient way, not only by wire transfer, which is obviously supported by most of the exchanges, but also an easy way directly from your credit card to go with an instant transaction into some crypto tokens and then instantly trade those on the exchange. So this is what we are about to launch. The concrete assets we are launching still under discussion, but well, obviously some of the top currencies we currently see.
And one small giveaway, and as a small thank you for all of you coming here today. As many of you know, we have our own native currency, the VALOR token. And for all of you coming here, I hope you signed in with your email, because all of you who came here today, you will be able to claim your first free 5 VALOR token once you sign up to the platform. So we have your email, and we drop you an email with the sign up link. So I hope you join us then for the upcoming launch and are part of the platform and of our journey. Thank you.
Thank you. Thanks.
Olga, back to you.
Yes, so with this amazing microphone.
And the small.
Yes, definitely. Definitely. So now let's learn something new about cryptocurrencies and investing in digital assets. Just a second. We do it this way. Okay, so guys, I have several questions for you. So let's see how this works. Here we go. So let's start with basically what is happening today. I think I'm moving in the wrong direction.
It's not going back, so I go back for you. One second.
Yes. So the first page.
First page.
Exactly. So first of all, digital assets. It's a big category. What are digital assets? Basically, you always need to remember there are 2 different, big categories. One is native digital assets, and the second one are asset-backed digital assets, right? So the whole area of security tokens, so-called security tokens, this is mostly asset-backed token. And the native digital token you can put in different categories, right? So this is, for example, the one I like to think about it this way. So there is like a big shining star is a digital gold, it's Bitcoin, right? Not comparable with anything else. Then there are cryptocurrencies, right? Like Litecoin and Bitcoin Cash and Dash and more and more coming up, right? The third category are blockchains. So basically alternatives to Ethereum, Tezos, Tron, and so on. More and more coming, right? The other one is, I call it blockchain infrastructure and dApps, like, Polkadot and Cosmos, how different blockchains talk to each other, what can be built on the top of those blockchains, right? So all this blockchain infrastructure, tech stuff, right? The fifth one is, for me, kind of like payments, and payments, it can be the token that is used as a payment, but also token like XRP, like Ripple. Ripple is actually a payment system, right? And the Ripple token is actually not used to pay things, but, it's kind of like de facto share of Ripple. Also, Ripple has also equity shareholders, but it's, it's much more beneficial to have another token that is not security token to trade globally. Then the third category, sixth category is kind of like financial market infrastructure. Those are the new emerging group of tokens which crypto exchanges give out as their native currency, right? So this is Binance token, it's Huobi token, so basically the currency of the exchanges, right? And it's VALOR token, it's basically the same, right? To do certain things on exchanges, you need their token, and this is how it works, right? And basically there are also this large group of, token-based platforms, marketplaces, logistics companies, data provision services, and so on, where there is a certain utility tokens that you need to use the platform. So the whole area of utility tokens. So when you invest in digital assets, it's always a question. So if you're speaking about pure digital assets, so question number one, so how much of your net worth you're putting into digital assets? From my experience working for UBS and being in wealth management, right? And, it's all about diversification and appropriate risk approach. I tend to say that almost everybody who is progressive investor today should hold at least 1% of their total wealth net worth in digital assets. Why? Because you see, kind of like if you lose it, if you made the wrong choice, or if the market doesn't develop within your time frame the way you need it, well, you lose 1% of your wealth. But if you make it right, this 1% can be, in terms of return, more than 99% of your, pension fund and bonds and other low-yielding alternatives, right? So it's kind of like, it's very asymmetric risk profile. Either it's going to be big, then it's going to be huge, or you lose it, but then you lose 1%. And then, so once you made a decision, okay, so I have, 200,000, so 1% is 20,000, so how do I allocate those 20,000, right? You can look at different categories. Of course, Bitcoin is like super huge. It's dominant, player in the global crypto market cap, currently one of the highest share in overall crypto markets traded. Then you can consider, okay, so I'm going to put a little bit into cryptocurrency, I'm going to put a little bit into blockchain infrastructure, I'm going to put a little bit into the maybe financial market infrastructure. I buy a little bit of Binance and Huobi and maybe VALOR, right? So and this is kind of like dependent on your area of expertise, right? If you're, for example, in healthcare, and there are amazing platforms built also on blockchain in healthcare. This is the area you can charge upon, right? So probably you should not just go there, but also look what's happening in this area. So this is a little bit, how, right? And the other exciting area, like this is purely native tokens, right? The other area are so-called security tokens. So this is asset-backed tokens. There is always something behind the token, right? And in the last several years, we've seen amazing, development in security token space. So what's there? There are basically, real estate, right? So you buy a share in a hotel in real estate. There are shares of the companies like, T0 Overstock companies. There are, music, films, all of this. There is art, or even the whole portfolios of different assets, right? Distressed debt, distressed real estate portfolio in Brazil, investment bank got it tokenized and sold as a token to people who pay them in cryptocurrency. This is what investment bankers are starting to do. So this is a huge area, right? And this is where we see our future. We exchange for security tokens. Good. With that, yeah. So of course, the talk of the day is the Bitcoin price and how this develops and what's behind it. A lot of people think, there are fundamental issues behind this movement, because we've been for 18 months in a bear market. So at some point, everybody had enough, and it's a time for the turn in the basically cycle of the market dynamics, right? There was Facebook, there is a Bitcoin halvening event coming up next year. So there are a lot of like fundamental and also kind of temporarily signs that this is a new beginning of the new cycle. So let's move to the next slide, maybe. Yes, Michael, you help me. Yes, so that's how the things look during the last 3 months, right? So we went from 3,000, 4,000 to 11,000. That's amazing development. Everybody very happy about it. But if you look at the larger picture, maybe it was the next slide, Michael. Yes. So that looks kind of like a little bit different the last 3 years, right? You don't see the other bubble here, 2014. But basically, the clear understanding is that, the Bitcoin price develops long-term upwards in the cycles, right? And there is no better perspective to look at this as if you look at logarithmic scale. So this is a picture, right? If you look at, it's just a change of perspective, right? Then you see that basically those cycles, they happen from time to time, sometimes 2 of them, but the overall tendency to up to, as you know, that the Bitcoin supply is hardly limited, 21 million. The more people use it, the more people believe in digital gold, the more people buy, and the price goes up. So I don't know if you guys see it, like I believe last year I predicted that Bitcoin will go up to 100,000. If you look at this development, this is 100,000. And you basically see that, it's not outside of reality, right? It's just a question, will it be, this year, next year, or the year before? So to all the people that ask me, oh, Olga, maybe it's too late, Bitcoin is now there for 10 years, like now it's 11,000, oh my goodness, is it too late? My answer is no. How much you should invest? Well, just the money that you can afford to lose. And then you're fine. Because there are still a chance that even something like Bitcoin can completely fail and there is nothing, right? So, good. With that, yes, I have some questions for you that I would like to answer jointly with you in a quiz for you to learn a little bit about the metrics of these cryptocurrencies, and maybe some of you know the answers. So you will get even more cryptocurrency if you get the answers right. But before I start with the quiz, I would like to introduce our friendly company and partner, Chain Analysis, and Huber here, a real big guy with probably even more powerful voice, right? He's going to talk a little bit about security of crypto assets, right?
Exactly, yeah.
Please, Huber, stage is yours.
Yeah.
Thank you.
Thanks a lot for having me. So yeah, we're Chain Security. We are, as the name suggests, focused on blockchain security. So we try to help other people with blockchain security. What that looks in practice is, for example, sorry. We will look at things like smart contracts. So if you have an Ethereum smart contract, what happens is that once you deploy it on the blockchain, you can't change it anymore. So this is different from like the normal IT world that we're used to, where we're used to updates and all these kind of things. And so that's a bit different in the Ethereum world or generally in the blockchain world. So we really need to make sure that things are right, because also if they're not correct, then you're getting hacked and you're losing lots of money. And these are not theoretical things, right? Like I could name multiple examples with tens or hundreds of millions of dollars lost. And yeah, that's a bit unfortunate. But what I would also say is that now that, similar as described before, we've been in the market for roughly like 2 years now, and I think we definitely see a progression in the market. It's a new technology, so it started out a bit with some obvious mistakes, right? But with new technologies, mistakes will be made. But we definitely see that the market overall is significantly maturing, which has happened along with the tool chains, the whole environment maturing, right? So that we see like tools are getting better, people are not making the obvious mistakes anymore. Maybe now they're making the more complicated mistakes, but we are trying to fix them one by one. And yeah, so in general, we're seeing an improvement on that side. And then on the other hand, we also see an improvement in people's understanding on what it means to build decentralized applications. So, because initially that's not so clear, like, because that's not what we are kind of used to. So normally we have like a server, and that server is handling everything, and on that server there's an administrator who can kind of control what's going on and do all these things. But that's not necessarily how things work in blockchain or in the decentralized world. So we are quite pleased to see, because we have now worked with over 70 projects, that also in that part we see like a good progression. People are understanding better of what can be done with smart contracts, what can be done with blockchain. So one of these 70 projects, we also had the pleasure of working with Smart VALOR, and there, just to name an example, so often we have companies that will just claim something, but they will not back it up with code. And that's a bit unfortunate, because, for example, that's what smart contracts let you do, right? They let you make a system more trustworthy, because things are controlled by the smart contract. So, for example, some companies will say like, yeah, this part of the tokens will go to these people, but they are not going to be able to do anything with it in the beginning. Whereas, for example, you can implement these kind of vesting schemes directly inside a smart contract, which was, for example, done by the Smart VALOR people. So that, like, you can really do nice things inside smart contracts, and we are seeing these things being used more and more. We're seeing like more powerful systems being built, and at the same time they're being more and more secure. So, but still we're not out of a job, so that's good for us. Yeah. So I guess that's what I would say about the development of the last 2 years and how we're seeing it. So after Olga already gave like a pretty positive view of what's going on, I would, from the technical side, agree with that. And yeah, I'm quite happy how it's been going recently, and quite positive of the future of decentralized applications and blockchains. And yeah, and I think was the idea that also, in case anyone has any questions on security, something you always wanted to ask about smart contracts, weird blockchains. So then feel free to ask. While I maybe should also mention that, exactly as Olga said, there are now these different levels, right? She mentioned Cosmos, she mentioned Polkadot, she mentioned people doing their own blockchain. So we also see more and more of that, and that's also quite interesting, because that brings whole new security challenges than evaluating the security of a new consensus algorithm or something like that. That's quite interesting, but yeah, that's why I'm also hopeful for the future. Yes?
You just talked about vesting smart contract. What is a typical vesting time, like after 1 year?
Exactly.
Is there any other way?
Well, that's the great thing, right? Pretty much everything you can think about, you can implement. So, for example, I can say like there's like a cliff-based vesting, right? So, for example, you pay 100 tokens into this contract, and exactly after 1 year, you can take them out again. Or I can do some linear vesting, right? Like, so, like after the quarter year, you can take 25 out again. Like, but it's really linear, right? Because the smart contract, you can do like whatever curve you can think about, you can do that, right? And it can even be based on other things that happened, right? Like maybe if the weather is good, you can take out more, right? Like that's, it can really, that's the power of smart contracts, that you can really.
You can have an oracle.
Exactly, yeah.
You can eventually
Yeah.
find it.
Exactly, yeah. So with based on an oracle, you can then define more interesting features. Yeah, exactly. Yeah. Yes.
Smart contract would be quoted by you, right? Or do I provide the token and you provide the marketplace?
No, we neither provide the token nor the marketplace. So we are really the auditors. So people send us the smart contract, and we tell them all the things that are wrong in there. So on the very broad perspective. So we would say like, we try to find all of the bugs, right? And for that we use certain tools. And we also have a lot of experience with that by now. As I said, over 70 projects. So we try to find all the bugs, and then we send you kind of like a report which has all the bugs written down, and give you some time to fix them. And then you send us these fixes for the smart contract, because often within these fixes, either you introduce a new problem or you don't fix the old problem completely. So, I mean, it's also understandable because typically these fixes are done under some time pressure and so on, right? That's totally normal. But yeah, that's why we are checking also the fixes again. And then at the end, hopefully you get like a total report, which says like, okay, there were some issues, but they're all fixed now, and it's all green basically. And some of these reports then also become public, like the one I already mentioned. And you can find those, for example, on our website or on the project's website then. Yeah. Yes?
So far, most of tokens reissue on Ethereum or smart contracts. So, but there are different blockchain frameworks, there is Stellar, etc. So, would you be able to review smart contracts on other blockchain?
Yes, excellent question actually. So, yeah, again, as Olga mentioned, there's like a diversification going on. There's many blockchains now. You already mentioned Stellar. So Stellar is a good example because it's quite different from Ethereum. So on Stellar, you kind of have tokens, I would say, built into the protocol. Ethereum, you have this totally generic system, right? And you can build anything on top. You can play tic-tac-toe on Ethereum, right? But you can also do a token. So, so in Stellar, actually, to be honest, there's no need for us to audit it because it's built into the protocol. So it's kind of either all of Stellar is correct or none of Stellar is correct. Like there's like no in between, and we hope that all of Stellar is correct. But on other systems, so we do audits for other systems. So for example, Hyperledger Fabric. Hyperledger is a consortium blockchain by IBM, Intel, I always forget the other big partners, but some big names. And they Hyperledger Fabric is in particular the blockchain developed by IBM. And it's more supposed to be used for private blockchain. So kind of a different setting than Bitcoin, Ethereum. For example, imagine 4 banks working together. So, but there you can also have smart contracts. Then we also audit, for example, smart contracts for a blockchain called Silica, which launched recently, developed by a Singaporean company, or EOS. So yeah, we look into different ones, not all of them, because so many are coming out that we can't keep up. But if you are sure that whatever you pick is the best one, then we're happy to take a look. It just takes up some initial time to catch up with the little details, because the little details really matter for security. Yes?
So I remember you found also the vulnerability for the Ethereum hard fork. So it's not only, your work is not only in the smart contract space, also you are working in the internals of the machine.
Yes, so maybe I can say a little bit about that. So you might have seen us in the news for that. That was January this year. So for those not so familiar with Ethereum, so Ethereum is this blockchain, and a hard fork is basically when the blockchain gets an upgrade. So the blockchain defines certain rules, right? That's kind of what a blockchain does. It defines rules, and hard fork is when you kind of upgrade these rules. And that was supposed to happen in January this year. And then actually what happened is, as I said, we have certain tools that analyze smart contracts. And then we were teaching these tools the new rules of the blockchain. And then we were thinking about these rules. And then we were like, wait, something's not quite right here. And so we reported that to the Ethereum Foundation, who then decided to make it public. In the end, the hard fork got delayed. Basically, what was the problem? The problem was that, as I said, smart contracts cannot be changed, but the rules of the blockchain can be changed. And that can have some weird impact. So, for example, if you write a secure smart contract, it might be secure at the moment, but if the rules of the blockchain change, all of a sudden your secure smart contract is not secure anymore. But they didn't intend for this to happen. They just didn't think about all possible consequences of this rule change. So basically, they removed this one rule change, which was the problem, from the hard fork, and then hard forked a month later. And yeah, but this is basically a continuous update process of Ethereum. So Ethereum has this kind of idea that they always want to keep developing. So they always want to keep progressing. So the next hard fork in Ethereum is coming up in October. And currently lots of new proposals are being discussed. 29 different proposals for what to update next. But yeah, it's a good question because, as I said, we also now more and more work on these internals because, yeah, there's many problems there also. And if the internals are broken, then everything on top is also in danger. So yeah, that's why we now work more there. Cool. Yeah. Then, unless there's any more questions. Sorry, yeah.
Something I don't understand is the energy aspect. I mean, everybody says like the blockchain is safe and it can do everything, but mining still uses a lot of energy. And what happens if you run out of energy? Then we just lose part of blockchain.
Yeah, actually that's a very good question. So it's a bit of a multi-part answer, I would say. So in first part, let me say that the energy problem is a problem of certain blockchains and not of others. So certain blockchains use this technique called proof of work, where the work part already implies there's lots of work going on, and this work is consuming a lot of energy. So that's currently most of the famous blockchain, Bitcoin, Ethereum, and so on, they all use this proof of work. But some of them are now transitioning to a new system, which is called proof of stake, which doesn't have this energy problem anymore. Some already have transitioned, so this Silica blockchain that I mentioned before, it already has transitioned to something like that. This EOS blockchain that is already also transitioned. So that part is kind of, let's say there's a new technology coming up and we're slowly moving in that direction. Let's say we wouldn't have this new technology, what would happen? So how Bitcoin works is, exactly as you said, you have to spend this energy to mine new blocks. And now, let's say all of us in this room are mining, then there's a lot of mining going on, and then the Bitcoin protocol automatically makes it harder to find these blocks. So that they ensure that still the blocks are on average found every 10 minutes. Now, I don't know, half of the room loses energy because, I don't know, it becomes too expensive or there's some energy crisis or whatever, then the protocol will realize that there's less activity going on and it will make it easier again to mine. So then it kind of becomes easier. So then still, even though half of us are just mining now, still every 10 minutes we get a new block. So that's, I'm not sure if that completely answers your question, but like the protocol kind of adapts to how much energy is available. And also people are moving away from this kind of energy intensive protocols.
The new protocols use less energy.
Yeah, they use a lot less energy. I mean, yeah, because obviously it's a bit of a waste. Bitcoin, by some estimations, currently uses as much as energy as a small city. So that's a bit of a waste. So the new protocols are basically, they are all very different, so I can't summarize them in one sentence, but let's say you, instead of giving energy, you give money. So I say like, so why did you have to give energy in the first place? You had to give energy in the first place to say that you are doing something for the network, you care about the network and so on. So now instead of giving energy, I kind of deposit some money there. And then if I misbehave or if I do something wrong, I will lose that money. So that it's a totally different kind of thing. So now my money is at stake instead of like my energy. But that's why it's called proof of stake, and like whole dissertations have been written about it, and we're still not 100% sure how it will work in the end. So it's a pretty complicated, but it's kind of the very high-level overview, in case that was helpful. Yeah. Cool.
Thank you very much.
Yeah. Thanks.
Thank you. So it's not surprising at all. Chain Security also audited our token, and they found out that it's secure and well designed, just as a side note. Last point, back to you, Olga.
Yes, so guys, I think the wine is getting warm, so we need to hurry to consume it while it's still enjoyable. So let's finish with a quick quiz. Who likes numbers? Who of you likes numbers? Yeah. So you guys gonna have fun. Shiraz will be counting the votes, so it works like this. I will ask you a question. And please don't open your phones. Without opening your phones, we will take to each question 3 suggestions, 3 answers. And when you answer, what do you think? What is your number? Please show the number, your number. And then we will figure out who was right. And then I will tell you the right answer. This little exercise will help you to get a feeling of how big is the market and where is it going. So we're going to run through this pretty quickly. So what is the current Bitcoin price?
In dollars.
No, 3 answers you need to say and show the number.
12,995.
12,995. Number 3?
In dollars.
In dollars.
13,400.
13,400. Right? And the third number? The third answer?
Yes.
13,500.
Okay, it's 13,486. So, yeah, you won. And your number is? 15.
Yes. So, can I guys run through my, well, it depends on the source. Yeah, can you? Shiraz, we actually have a different source. So the source is actually, if you guys are looking at the price and you're not sure, there are so many exchanges. There is CoinDesk, and there is something called blockchain.info. So this is the most reliable information. And you know, there is a coin market cap, and everybody is calculating price different. For me, for the last 5 years, it used to be the go-to source, blockchain.info, and they have a lot of statistics. So if you're interested, have a look there. So, am I moving? Or you guys are moving? Who is moving?
Scroll down.
This way or this way?
And if you scroll on the little...
No. Yes, so the next question, next slide, please. What is the current Ether price? 3 answers?
350. 400.
400. And?
I reckon I think it's about 2,440. Slightly express.
Oh, this is pretty good, pretty good. Next slide, please. No. You need to, guys, you need to put it into the demo mode because it's animated. So it's just 1 click and the answer comes up. Okay, here we go. Yes, so 261. Who won? I guess the lady, right? Amazing. Yes. Okay, again, current prices, not yesterday, right? So the next question is, this is just a warm-up. Next question, please. What is the current total market cap of all cryptocurrencies? If you multiply their price by the number of currencies outstanding, where do we stand right now? 3 answers.
180 billion dollars.
180 billion.
400 million.
No, so number 3 is 400, and sorry, he was first. The number, your number? 300? 26, and the winner is, next slide please, 350. So the closest guess was, I guess, this one, right?
No,
Are you sure? Are you sure? 350?
Yes,
I'm not sure.
2 hours ago.
I know. 2 hours ago, the price of Bitcoin was not 13.
Yep.
500 smaller, and now if you read it, I'm more close.
I think even Bitcoin just passed 200 billion today.
Yeah, Bitcoin is over 200 billion.
Yeah, along 200, and Bitcoin make about half of market.
Even more.
Bitcoin
Currently,
Even more.
more.
And so
Yes.
this 400, I am more better.
Exactly. Exactly. Okay. So next question. Total number of blockchain wallets created ever. How many blockchain wallets people opened
Across all blockchains.
across all blockchains?
Talk about billion.
200 millions.
200 millions. That's number 3. Anybody else? Just guess.
1.5 billion.
How much?
1.5 billion.
1.5 billion. Wow, that's very hopeful.
10 million.
200 million, 3.
200 million, 4 million, and 1.5 billion. Wow, we have a range, guys. Oh my God. No, let's ask one guy that actually might know it. Jürgen? How many wallets?
I would say
40 million.
32,000.
So-
32 million.
And I guess,
39.999 of this.
wow, this is a good one. So you guys, 40 million. So Jürgen won. This one number? Just for the record? 6. Great. So, but guys, by the way, think about this. Think about this and Facebook. Facebook has 2.6 billion users, right? Now imagine if only 20% of users of Facebook will use their cryptocurrency. 500 million, right? It's like 10 times bigger than all blockchain wallets, right? This is why I think Facebook is great. And it's great that they're doing it because it's also good for our industry.
Centralized, not really decentralized. Yes.
It has a lot of problems, right? Big Brother is going to be watching it. It's like all of this, right? But they come to Switzerland to do it, right? So, yeah, in Geneva. The foundation is Libra Foundation Network. Foundation is in Geneva. So total market cap. Now, are there any bankers? Anybody who knows something about equities? Former bankers, yeah. So now we know the numbers about crypto. Crypto market cap is 350, right? Billion. How is this compared to public equities?
2-3%, 1-2% about.
Good. So how big are total market cap approximately?
3 trillion.
3 trillion.
2,000 billion.
200.
Yeah, 2 trillion.
200 trillion.
2 and 12 now.
2 trillion.
2 trillion.
2 trillion.
Any other guess?
3 trillion. 3? That's my guess. 3 trillion.
Wer bietet mir? It's actually much bigger. It's 78 trillion. 76 trillion. Well, I mean, maybe that's not like today, but approximately, right? So you think about it, like 350 billion crypto market cap and 78. So equities are huge, right? But now you will be surprised. You will be surprised. Next question. Total market cap of tokenized securities in 5 years. Oh, that's a difficult one. So if you think about like how many equities are today? 78 trillion, right? How much of those equities and, real estate, how much of this is going to be tokenized, security token?
So in 5 years, 10 trillion. 10 trillion.
This is a pretty good one. Oh my goodness. I'm really surprised. Please, the next one.
Let me understand the question. This is the last 5 years or the next?
In the next, in 5 years. So this is my favorite one. You know, if you look at real assets, yeah, he's smiling, right? Well, nobody knows, but the World Economic Forum predicted that in approximately 5 years' time, about 10% of GDP will be recorded on the blockchain in the form of tokens, right? Will be tokenized, right? If you look at GDP in 10 years and approximately look 10%, then you arrive at 10 trillion, right? Next question, please. So, total volume of crypto traded per day as of now. This is a difficult one, right? Because of all the trades and exchanges, it's all wash trading, right?
Number of transactions.
No. How much real transaction volumes is turning on exchanges every day? Every day. Yes.
I would say
Olli, kannst du? 2.5 billion. Any other suggestions?
8 billion.
8 billion. Very good. Any other ideas? Give me more. Well, it's actually funny because if you look at crypto market cap, right, and all this kind of like official numbers, it's huge. It's so big. But you know, there are some organizations that try to figure out what's the real volume on exchanges, like on legal exchanges, like Coinbase and Kraken and so on. So approximately, it's around 20 billion per day. And now, guys, the interesting part is, like this 18, 20 billion, right? So the interesting part, this number, if you look like 3 years ago at this number and today, it was growing at the rate of 400% average per year, right? So even when the crypto and Bitcoin price was down and everything down, the volume was still increasing, right? And the interesting thing is, like, you know, if you take this number and this grows 400%, and if you say, well, it's not going to happen the same speed of increase in the next years, it's going to be much slower. So, and with that, exactly, what is the next question is total volume of trading. If you compare this to global equities, like what do you think, how much volume, daily volume in global equities? You saw they are much bigger, they're 78 trillion, right? Global equities. So how much is the volume, trading volume?
In general?
In equities.
In equities.
Mm-hmm.
1 trillion.
1 trillion.
Much more.
Mm. 10 trillion. Mm.
15%.
Any other?
10
trillion. Well, guys, this is an amazing thing. I also thought it must be like, if it's such a huge asset class, it must be a lot of volume trading, but it's not true. It's just 386 billion per day, right? So in comparison to the asset class, trading is actually not that big. And now the key question is, and this is the last question, what do you think how much trading volume per day we will see in cryptocurrencies in the next 4 or 5 years?
About 350 billion.
$100 billion.
100 billion?
Maybe 350.
Any other guess? I have to tell you, you know, I'm also from Russia. There's one thing that Russians are good at, math. You guys can count, right? And you're absolutely right. If you decrease the speed, you say, well, not 400, just maybe like around 100% annual growth, we will reach about 3 billion daily traded volume in crypto in 4 years' time. So it will be approximately, yes, so it will be, and maybe even reaching the volume of global equities. And the question, why? Because it's on the blockchain. The transactions are instant, right? There is no 2-3 days settlement, right? And everything moves so fast, right? And it's a very speculative asset, right? So there are huge volumes. And now that was my answer when investors asked us, So Olga, how are you going to make money? Security tokens, so complicated, huge regulation. What if you guys don't make it? What if there are no huge volumes? My answer was always, we're in crypto business. Is we're going to trade security tokens or cryptocurrency? This is such a massive growth. It's such a massive opportunity, right? And it's not too late to start. So that's maybe just a little bit for you, food for thought, for the size and the numbers. And I wanted to share this information with you because I think so many people are talking about crypto, but very few people really understand what's behind it. And I very much hope that with that you learned something new and it was worthwhile coming and visiting us today. So thank you very much, guys. And now let's drink cold wine. Thank you. Thank you.